I still think that gold is got higher to go midterm. And as I've mentioned to you in the other interviews, that it wouldn't be a straight run up. Uh, again, there's a 20 to 25% rally that October low that we saw.
Jim Curry, how's it
Oh,
going?
pretty good, Andy. It's good to be back. Good to be with you again.
Yeah, it's great to be with you. Let's talk some gold here. A
Sure.
little bit of feedback on the gold price. You nailed a run. So I want to give you a lot of credit where credit is due. The last time we spoke was in November. And before that, I want to say it was late September, and you really nailed the run. So great job on that. So now it's being you're nailing two there. What are your thoughts now here moving forward for the next few months?
Well, in market forecasting, there's a certain amount of variance to being right or wrong. And if I'm right a certain length of time, I wonder if I'm going to be wrong going forward. But I still stick with the analysis because you have to kind of go with what got you there. I still think that gold is got higher to go midterm. And as I've mentioned to you in the other interviews, that it wouldn't be a straight run up. Uh, again, there's a 20 to 25% rally that October low that we saw was a 310-day cycle bottom. The average rally is 20 to 25%, suggesting to us that we're going to go up to the 2270s. Some of the channel stuff says 20 low end 2300s. But it'll take it to spring, maybe even early summer to get there. So I'm sending you some charts and we can kind of look over those.
Yeah, let's look over the charts. Take us to the first one.
Yes, the first chart is the 72-day cycle. Now, we keep track of a ton of cycles. From 10-day, we got a 10-day cycle. There's a 20-day cycle, 34-day cycle. You can go on, but the 72-day cycle tends to be the most dominant for swing traders. Somebody that we could talk about on an interview, that somebody can try to play this. Back in when we talked in November, I said that this 72-day wave was pointing higher into December. And I gave you a mid-December estimate, but there's always other factors. We did give 2150 in our gold wave trader report as the level to watch. If we hit that level, I didn't think we would get it, or at least I didn't think we would get it that soon. We ran up to high, I think it was 2158.
Yeah.
And there was a couple of channels that intersected price, and we did point that out in our report, and it hit it overnight trading. So unless you were there for the first hour or two of that, as soon as it hit it, it backed off. It opened and ran into it, and then you saw that drop. You got the initial drop, and then we rallied. And my assumption was that we still had more weakness. We projected back then that this cycle was probably going to bottom out sometime around mid-January of this year. But having said that, it's just, as price plays itself out, I've got an indicator that it's on the bottom of this chart. It's called a D trend, 72-day D trend. This is an indicator that I've developed based upon momentum. And basically, you're looking at the cycle and you're looking at the velocity of it going down, and it will adjust the projection for time as price action continues to unfold. So it'll give an initial target for, say, mid-January. Okay, now you can look at this chart. This D trend kind of suggests late January, maybe even into early February. And if we were to see something play out of big magnitude here the next week, it maybe even push it out slightly further. But it basically shows you that the cycle is moving toward bottoming range. Uh,
Short term.
right. And the downside risk we gave, maybe mentioned this on one of our prior interviews. My rule is that a cycle that's valid is going to revert back to a moving average about 85 to 90% of the time. So when we get up to 2150, I mean, obviously then you're stretched above that 72-day moving average. So we said we'd get a correction back to that. That would be usually the minimum magnet. We did finally hit it late last week. But I've also got another indicator on this chart. It's called a cycle band indicator. Uh, it's these bands, they look like Bollinger Bands, but they're not. It's a similar calculation, but not exact. And usually you'll come down in a correction. You will want to hit that lower band, that lower cycle band on this chart's in red around 1991. So we're 2022 as you and I are doing this interview. My assumption is that we've got some more additional downside to play out. Then once we get down to that lower band, we will start. Then what we do is look to reversal levels, kind of like a step ladder. A reversal point is a higher level that will tell us when the cycle has bottomed, and it's key because this cycle itself, the average rallies are around 14% from trough to peak when it comes off a higher bottom, which is what we think is going to happen here. So you got a potential rally of 14% into, say, late February, maybe even pushes out to mid March, something like that. Then you'll get another correction with a cycle, uh, probably into April, and then you'll finally do a final spike higher into what we think is that late spring, early summer period that I mentioned. But again, so this chart just gives us some information. It says that we probably have some additional weakness to play out into, maybe another week or two or three, and then at that point we will start looking to our reversal levels to tell us when it's bottomed. There's other indications you can have that will kind of help you pick a low if you want to do that. And we will talk about that on one of our other charts.
Yeah. Show me what else you got.
Okay. Well, let's just scale it back, Andy. Let's scale it back to this chart number 2. This was one of the charts. This was the major cycle that was due to bottom in the autumn of last year. We thought it would come into early October. I forgot exactly, or late October. I can't remember what I told you at the time, but I said even at that, there's always a plus or minus variance. Anytime you have a cycle of 310 trading days, there's supposedly a plus or minus variance of 60 trading days in either direction. Well, that's 2 months in either way. So we try to narrow it down better than that. So we were correct in looking for a low in October. And then we got the rally. We thought it would be a counter trend decline. We thought it would hold above the November 2022 trough, as it did. And then from there, your upside was to 20 to 25%. So we basically used the October 2023 low, add 20 to 23% or 20 to 25%, excuse me, and some get around the 2270s. But then we use the channel analysis to kind of help guide us. There's some bigger channels that pushed around that 310-day cycle. So if you take the lower channel there, it's in thick red, and you just kind of put an equal channel line above the prior peak, and it kind of gives you maybe a potential upside. So you can see that if you extrapolate the blue channel out into kind of along its current path, it gets you to about 2,300, low 2,300s, maybe by late spring. The time frame for tops is always harder than bottoms.
Sure.
So we have to look at other indications when we get there. But then we think that that's going to form the next key peak for gold. From there, you'll get a sizable correction. When this cycle topped back in, I think it was May of last year or April, something, and whenever it topped last. And we thought we had a good correction because, again, you can look at the moving average. Okay, look at the 310 moving average is in 1992. So if you were to go up to 2,300, even if you were to extrapolate this 310-day moving average into later this year, then it's still going to be, 10, 15% below price level. So it gives you an idea of what to expect in terms of a correction. But anyway, we're looking for that 72-day cycle to form a counter trend low here in the next few weeks, and then to resume the uptrend. So, and then we can kind of move down to the last chart. I'm always looking for technical signals or indications that will maybe help me to pick a bottom. We don't always get them, but we get them more often than not. One of our key indicators is a proprietary indicator called the gold timing index. And it's shown in this chart number 3 in the middle pane in blue. And this is a kind of a sentiment measure, also a momentum measure. And it does give us a level of overbought and oversold places where we would tend to look for a bottom. When the indicator is diverging from price, as it did back in May of last year, and we then those red arrows, I placed them in real time. These are not placed after the fact. These were placed in the report in real time. That was when price was diverging, that we hit that new high, and then we had the divergence of this indicator, and they gave way to that sharp decline into that 310-day cycle low. We didn't get the divergence in October, so you don't always get it. You have to take the reversal. Once you get the indications are that the market is bottoming, then we take the reversal. Use that for our indication. So at any rate, with this gold timing index, what we want to note is it's a current rating of 87. What we like to see a drop below 40. So
Got it.
we're at 1022 right now as far as price. We're at 87. That's we're still a good distance away. So I think that we've got some lower lows or additional weakness here, here in the coming weeks. And I'm not sure exactly how much. I can't tell you that. But I do favor lower lows. If we get down to 40 on this, or even close to it, doesn't have to get all the way down there. Maybe it won't get down there. Maybe it'll just come close to it. And at the same time, there's another indicator in red, 72 days. I call it the 72-day oversold. It's basically, it kind of acts inversely to price action, kind of like the volatility index is with the S&P 500. In other
Like the
words,
VIX.
volatility yeah, sure. When it's high, the S&P can be near a low. It's not always true. But
Right.
so this indicator, when it spikes above that upper reference line, then we tend to think the 72-day cycle is bottoming. We would be looking for this. So we're not there
That's
yet. We're not
that's
there.
great.
But
Yeah, it fits really well with your thesis that, next few weeks you expected to sell off some. That would match up with these indicators that you have here.
sure, and it might not take a lot of weakness to do it. I mean, prices sometimes these will change quickly. So we may drop 40 points for gold, and that may do it. That may be all it takes when we get it on 1980 or something like that. I think that 1980 is kind of a key support level. It's near that lower 310-day cycle channel that we looked at on chart number 2. So that's an area that I'm watching for a low. But what I would do, if you want to pick a bottom, use these indicators to try to pick a low. If you don't want to pick a bottom, because sometimes it's very dangerous work. What if you're wrong? What if the thing is going down? We have and a trader that's ever, they've been there and they've done that. So you could take the first reversal up is always the lowest risk trade. Of course, most people have a problem with buying it when it's already rallied $50, $60. And
Right.
so, but that's usually, if you have a problem with that, it's usually the correct trade to make.
That is so true. Yeah, that is so true. All right. Well, it looks like again, I'm gonna monitor this very closely over the next few weeks. Very interesting. And I'm looking really at your gold timing index. And then also to correspond with your 72-day oversold. I like that you set it up because I used to trade the S&P a lot. I like that you use the volatility index similar to that because I get that. Yeah, I see what we're looking at, and then we'll see how it plays out.
Sure.
Jim, how can people get a hold of you and your work? Go ahead and give that, and I'll also be happy to put a link in the show notes.
Well, you can just goldwavetrader.com, and they can go to the site there. And there's if you want the charts that I've posted to you, the chart link, you can include that however you want to do it. But just goldwavetrader.com. And there.
Well, you're so gracious, and Jim, I'm going to have you on in about 2 to 3 weeks again.
Oh, okay. Yeah.
So please put me in your calendar for about 2 to 3
Okay.
weeks.
Okay. We'll do it.
Always a pleasure, Jim. I want to thank you so much.
Okay. Thanks, Andy.